When you want to go out and buy, things are not cheap. When you're feeling scared and want to invest in fixed deposit, that is exactly the time when things are cheap. So I think what's interesting for me and what stands out for India, and we wrote a piece about it called The Joy of Rowing Downstream, is that India offers a unique combination of growth and acceleration.
Hello and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. Another weekday of trade for the markets. The Nifty struggles to hold the 10,200 mark. The currency continues to weaken, falls to a 6-week low. The 10-year bond yield hits the 7% mark. Eicher Motors' second quarter meets analyst estimates. The stock falls to the lowest point of the day. Bharti Airtel sells 4.5% stake in Bharti Infratel for 3,325 crore in the open market. The proceeds will be used to pay debt. And Sun Pharma and GAIL are some of the other big companies scheduled to report earnings later today.
Well, it's a bit of a recovery that we're seeing in the last maybe 30 odd minutes from the lows. So the lows were somewhere around here. We are down about 0.4%. From those odd levels, we moved up a bit, ever so marginally, but still about 20 odd points down for the Nifty. So a ho-hum kind of a market. The market breadth will come up on your screen. The mid caps and small caps will come on your screen. And there you can see a bit of a narrowing down from the adverse market breadth, but still firmly in favor of the declines, and the broader markets too under a bit of pressure. However, marginal pressure at that. However, the Nifty 50 heat map will come up on your screen and you will see that there's pressure on Bharti Infratel, yes, but technology is under a bit of pressure. Larsen and Toubro was under pressure the last time I checked, and OMCs continue to grind lower. So IOC, BP, HP continue to roll under pressure. What has done very well today is Reliance Industries, and that is sitting at the top of the pack, up about a couple of percentage points, and that is lending that bit of a helping hand to the markets today. So you got to give credit to Reliance. I think we spoke about it in the morning. Abhijit Pathak had given a buy call on Reliance in the morning today. That stock is doing well. Aside of that, not too many noteworthy gainers, quite frankly. Maybe an odd Hero MotoCorp or an Axis, but not too many great gainers. On the losing side, OMCs continue to remain under a lot of pressure. Eicher has had a bit of reaction to its numbers too. But Pradeep, what about the broader end?
So if you look at the broader end of the market as well, some of the most liquid stocks quoting with good volume or turnover, you'll find more gainers than losers. So that's really interesting. Reliance is not all alone. Let's talk about some losers first. JP Associate, although this one has also corrected from the lower levels, which means it has pulled back, gone up. RCom is another key loser, which continues to fall with good volumes. But other than that, you have so many gainers like Repco Home Finance, rising after good numbers, open strong and continues to sustain that level despite index giving up a lot of gain or market breadth turning negative. You had Action Construction. Look at this one. Stock has gone up by around 16-17% by now. You also have some more mid caps like Tin Plate, which have gained quite a bit. That stock should also come on your screen. This is Tin Plate, quoting at day's high actually. HOEC, we saw some oil related stocks moving up today, but HOEC has taken a lead, finally up 6% in today's trade. And old favorite HEG and Graphite back to upper circuit. So that is the good news actually. Action is definitely on the positive side as far as mid cap and small caps are concerned today, Navneet.
Thanks for that, Pradeep. And let's also take a look as to what's happening in the futures and options market. Well, the markets have seen a slight bit of recovery coming in just last 15 to 20 minutes. But overall, the sentiment remains bearish as the Nifty is still trading below its 20-day moving average. However, one important point, the Nifty futures did not breach the 10,200 mark. If you could just pull up that, the premium is still at elevated levels. Remember, yesterday's premium was almost 45 points. So Nifty futures have been trading with good amount of of premium as of now. But overall, in terms of options data, the call writing continues for out-of-the-money strikes right from 10,300, 10,400, and also the 10,500. All these strikes have seen good amount of OI addition, but the 10,300 put is also being little bit active in today's trade. 10,200 has seen open interest addition of almost 4 lakhs. What to watch out, what level to watch on the downside has to be the 10,150 mark, and for Bank Nifty, watch it for 25,200 mark. That's where the first support level will come for the index. Just 2 stock futures I want to mention. Balkrishna Industries, this is a counter which gained almost 6% in yesterday's trade. It is trading at its fresh 52-week high. On the futures side, the long momentum continues. Fresh long seen, open interest almost 14%. And Repco Home Finance is a counter which has been gaining strength since the morning session, though it has come off day's high. The stock has seen good amount of volumes on the cash side, so do watch out for the delivery data on that. And the futures have seen fresh longs, and the open interest for November futures is up almost 23%.
So the levels you mentioned for index 10,150 is for futures or cash?
For cash.
For cash.
In fact, the futures have so far not breached that level. I would just ask.
So they maintained a premium of around 45, 50 points.
If you could just pull up the premium plate, I want to check on Nifty futures. Last when I checked, it was hovering around the 10,240 mark. That 50 points premium. So it's gone up from yesterday's level. And Pradeep, yesterday's correction came in just in that last hour of trade. It is indicating maybe at these lower levels there are traders who are willing to take some sort of long positions.
So I mean, trend in index and mid caps remains more or less the same. The action is definitely on the long side, Neeraj.
Yeah. Okay. Some news bits on your screen before you move ahead, and we'll get in Arpan to really speak about this. But the Supreme Court has decided not to initiate any contempt proceedings. For the benefit of viewers who do not know about the importance and the significance of this case, remember Prashant Bhushan and Kamini Jaiswal had alleged that Chief Justice Deepak Misra was linked to a scam involving admissions to debarred medical colleges, and mentioned that as a deliberate attempt to scandalize the institution and denigrate the judiciary. But I think a bench of justices, whether the 3 justices which were doing this, had found nothing against the Chief Justice as alleged, and we're going to pronounce the order today. I think the order has been pronounced, and Arpan should be joining us any moment to talk about this. So that's the significance and the importance of the case. Okay, but Arpan, I'm told, is with us. Arpan, take us through the details. As we know, the PIL, Kamini Jaiswal PIL has been dismissed.
Yes, that's right. So the court has dismissed the PIL, as well as they have said that there is no need to initiate contempt proceedings, on which also there was some discussion yesterday, which is specifically in reference to Mr. Prashant Bhushan. The court has said that there is no need to initiate contempt proceedings. However, they did observe, and the point in the judgment say that what the bench believes is that some of the statements made by Mr. Bhushan did amount to contempt, but overall the court has decided not to initiate any contempt proceedings. And this was what the judge on the bench said, that when he finished reading his judgment, he said, let's now work for the welfare of this great institution. That was the essence that the bench was trying to give. We just spoke to Attorney General also, who said that it's a statesman-like judgment. That was his first comment as well on the judgment. Some of the points that have been raised in the main point of the judgment are that the bench has said that the Constitution Bench judgment, which was given by CBI on Friday, is a binding judgment. The petition also, the judgment also notices that the petition is not against any judge, nor is the FIR also against any sitting judge of this court. And the court also again made observation and said that the attempts by the petitioners to file the petition in 2 different courts amounts to forum shopping. Remember now, the first petition was already pending, and after that the petitioners had gone again on Thursday and made a prayer for an appeal. So that the court has said that it amounts to forum shopping, as well as on yesterday's incident. During the hearing, the petitioner had asked for a recusal of another judge who was there on the bench, Justice Khanvilkar. The court had also observed that in the judgment that this act by the petitioners to ask for the recusal of Justice Khanvilkar, that also applies, is also similar to forum shopping. So these are some of the broad points of the judgment. Main is that the petition has been dismissed, as well as no contempt proceedings have been initiated against the petitioners.
Okay. Arpan, many thanks for joining us and putting that into perspective. Remember, yesterday or sometime earlier, I think Justice Mishra had told Prashant Bhushan that there was nothing against the Chief Justice of India, and if the court starts acting on such allegations, no judge is safe and no judge will be spared. A.S. Chandok, senior lawyer, joins us as well. The significance of such a judgment, Mr. Chandok, while on expected lines, because most people anticipated this today, but the significance of such a judgment according to you?
You see, the court has only denounced the people using forum shopping to go and take proceedings one after the other, is the first part, and like the fundamental principle of any judicial dispensation that you can't have forum shopping to ask for the same relief again and again. If their association of which she forms a part has already filed a petition and was pending adjudication before the Supreme Court, there was no need for filing another petition. Therefore, that's probably what has been deprecated by the Supreme Court today. And the second is what the Supreme Court itself said, that my restraint is my power, and therefore they have not initiated any contempt proceedings against Kamini Gaswal or anybody else.
Okay, so fair call. Get your thoughts. Just one question, sir, if you will. I think in what Justice Mishra had told Bhushan yesterday as well, the statement that kind of laid it out that if the court starts acting on allegations that lawyers may come out with on every allegation, then no judge is safe and no judge will be spared. This kind of gave out what the verdict could have been today. Your thoughts here?
My thought is that we will have to put a restraint, and people making allegation to any judge, whether it is a subordinate judge or a judge of the constitutional court or the highest court of the land, a lawyer or a litigant has to be careful. Unfounded allegations, just making enunciations and saying that something is wrong somewhere, is destroying the institution, and nobody, what to talk of Honorable Chief Justice Deepak Mishra, I think no civilized society should allow such a situation to come before the judicial dispensation of any country.
Fair call. Thank you so much, Mr. Chandok, for joining us today and giving us your quick perspective. That's an important verdict, yes, disconnected from the equity markets, but important nevertheless, and which is why we spend this bit of time on the same. However, full tilt back towards the equity markets. Remember, OMCs are the ones under pressure, L&T is a bit under pressure, and IT is under a bit of pressure, but negated by the gains that are coming into the big boy Reliance Industries, and then a couple of pharma names. Rahul Singh, partner at Ampersand Investment Advisors, joins us right now on the show to talk about his thoughts. Rahul, good afternoon. Thanks so much for waiting by while we were addressing this political, or rather this legal development. But does it seem like the market is in a bit of a risk-off mode? And I'm not just talking about India. I was just looking at what the other Asian markets have done in the last 4 or 5 days in the run-up over the last 1 month as well. And seems that all of them seem to be turning the corner at the same time. A bit of a pullback almost across the emerging market and the Asian market back.
Yes, you're right. I think if you look at India per se and forget about what's happening globally, a combination of moderately higher oil prices, rising bond yields, and state elections can never be a very good thing for the markets, especially because, the results, if you look at the earnings, they have not really picked up. In pockets they have, but not really overall. So market obviously was running a little bit ahead of fundamentals, but what it needed was a little bit of a pullback, and these combination of these 2 or 3 factors which I mentioned has come, in my view, at the right time to just bring some sanity into the valuation. So it's a welcome phase if this phase lasts for another 2 or 3 months, which we think it could, for the stock pickers like us to again go back in and try and find value, which was becoming difficult.
Mm-hmm. So you don't really believe, Rahul, that a Reliance, for example, correcting from 960 odd levels, by around 10% or so is enough? It's going to, the correction is going to last much longer, and we'll see further lower levels in these heavyweights as well as maybe mid cap and small cap.
Yes, it's difficult to pinpoint one stock alone because the valuations had got a little bit ahead across the board, and we have seen again, in segment by segment that correction happening. For example, in NBFC and private banks, we saw that pullback We saw that step back when the recap was announced because, over last 2 to 3 years, a lot of liquidity flow into NBFCs and private banks had taken the valuations to a level which are not entirely justified by growth. There was a scarcity premium there also. So similarly, we are seeing different segments coming under a little bit of pressure purely on valuations. Having said that, I think the March quarter numbers will truly start looking good for the economy. We are seeing early signs of pickup in the consumer spending. We have seen the auto numbers pick up. So we firmly believe that the cyclical recovery in earnings is underway. But in March quarter is when we will actually see the full impact of that. Till that time, the market could be really in a sideways kind of a movement for some time.
Rahul, you just mentioned that you expect this sort of consolidation to last for the next 2 to 3 months. And if that were to happen, if we expect a little bit more correction, we've only corrected around 3% from the top when it comes to Nifty. Which are the sectors that you would be looking at to buy at these lower levels?
Well, the sectors which we like and the sectors on which our alternate investment fund is focusing on, we call it the 3 C's, which is the capex, which is public capex theme, which is construction broadly, commodities and consumption. And these are the 3 segments which we will continue to be on the lookout for to buy stocks as and when they correct. Specifically speaking, I think from an earnings tailwind perspective, I think construction and public capex plays have most going for them, and specifically the road construction companies and also the companies in the broader urban infrastructure space, the likes of PNC, ITD cementation. These stocks, I think even from an earnings point of view, December itself you will see momentum coming in. You don't have to wait as far as March. So there are some segments which are going to have huge tailwinds in earnings as we speak, and we don't really have to depend on a broader macro recovery in India.
Rahul, stay on with us. There is action seen in the currency market as well. We'll go across to Saloni Dhanuka to find out what exactly is happening there. And Saloni, looks like Indian currency is the worst performing currency in the Asian region in the month of November.
Well, correctly said. The rupee is continuing its 3rd day losing streak today, and it is now trading 0.1% lower at 65.50 levels against the US dollar. Now the home currency did open higher at 65.35 levels, but it fell back into the red to hit a fresh 6-week high of 65.55 levels against the dollar. And on a month-to-date basis, rupee has depreciated over 1%, making it the worst performing Asian currency. Now analysts at Edelweiss and Credit Suisse believes that rising crude oil prices and concerns over fiscal deficit are largely pressurizing the rupee. Now, wherein head of research at Edelweiss expects rupee to trade in the range of 65.20 to 65.90 in the near term, while analyst at Credit Suisse believes that the home currency can breach September highs of 65.70 levels in the near term. Now, moving on to the bond market, the 10-year benchmark yield jumped 9 basis points intraday to hit a 13-month high of 7.06 levels. And lastly, foreign investors continue to reduce their rupee debt holdings for the 6th consecutive session, according to NSDL data. Namit.
Thanks, Saloni, for all these details. Rahul, do you have a call on rupee, or how does that really affect your stock strategy?
Well, it does, but not to a large extent. We think any wild moves in rupee are very, very unlikely. So between 64 and 66, we are broadly there. Unless crude breaches $75, we don't see too much risk to the rupee. So having said that, then then we are really playing at the margin, and we typically don't like to take a bet on rupee while we are taking our stock bets. So while we like some portion of the exporters like specialty chemicals as a space, they are not really a play on rupee one way or the other. We've seen some results being soft in the sector, like Aarti Industries, which was probably impacted by a stronger rupee. and now they will benefit. But I don't see the investors, and we don't recommend really investors looking into these kind of quarter by quarter movements in rupee as the reasons to buy or sell the stock.
I have one final question from my end, Rahul, and that's on specialty chemicals. I believe it's a bucket that your team tracks fairly closely and well enough. The numbers this quarter around haven't been the best. Almost all of them, barring an exception, would have had tepid revenue growth and thereby tepid EBITDA and bottom line growth as well, if at all. Has it been a disappointment, or was this factored in this quarter?
No, I think it's factored in, because what happens in specialty chemicals is different companies are in different products. So it's not really one product which we are talking about. There are hundreds of product lines, and within product lines there are sub-products. So that is one. Secondly, companies are at different stages of the capex cycle. Some companies have just finished the capex now. Some companies finished the capex 6 months back, so they are seeing the benefits now. Some of the names which you might be alluding to, which have shown good numbers, is because they have finished the capex 6 months back and now reaping the benefits of that. Also, in certain segments, pricing has recovered, especially in dyes and dyes intermediates, for example. So you will see results being decent in those segments. So I don't see any major surprises, therefore, because for someone who knows all these segments, each segment has behaved differently and each company has behaved differently. But if you take a 2 to 3 year view, that's a space which will continue to do well.
Well, one last question, Rahul, from my side actually. Traders are kind of trying to figure out how to benefit from this entire process of NPA resolution. So sometimes we tried buying into Bhushan Steel. Yesterday we saw JP Group stocks moving up, and today they have all fallen down with the fresh news flow. Do you think this process is actually on track and we'll see a time-bound resolution? And is there really an opportunity for equity shareholders to make money?
Well, as far as resolution is concerned, definitely. I think what is happening now is that there is on the ground bunching up of these resolution cases with the NCLT, and there are a bunch of steps to be followed at the NCLT before you can call for bids. So as I said about earnings, unfortunately, even for resolution, I think March quarter is when you will actually start to see or hear about announcements of successful resolutions in these cases. So I think if you want to really time it, it's probably a bit early to play that as a theme and buy some of these names which you mentioned. But I think it's on track. We don't hear anything to the contrary. And also what we expect is that March quarter is when even the recap details would be worked out, because right now I think there are a lot of discussions going on what could be the modalities of the recap bonds and who gets how much, and whether it's what are the parameters based on which banks will get recap. So a lot of these factors will, I think, get clarity in the March quarter, in our view.
All right, Rahul, we'll leave it at that. No, thanks a lot for joining us today and giving us your views on the markets. Well, let's move on and talk about the stock of the day, and that has to be Repco Home Finance. The stock has gained the most in over 2 years after a strong set of numbers. The stock is also gaining for the third straight day today on back of strong volumes. If you go by the numbers, they posted the net interest income for this company was up almost 17%. Profits came in at about 56 crore versus 46 crore on year-on-year basis. And revenues too from operations saw a jump of as much as 7%. And this was one company which actually came under pressure post demonetization. Even if you go by 1 year return, they've not done too much, but looks like after a good set of numbers, a revival is set for Repco Home Finance, which is in fact in last 12 months up only about 7%.
Yeah, in fact, I think last 2-3 quarters were not that good. So it's kind of, coming back on track for this company, which has been one of the fastest moving home finance companies other than the Canfin Homes. I think these are the two fastest moving stocks in terms of the kind of returns that they have delivered. And then it started correcting. So Repco is now trying to move back with this quarter's numbers, and reports have also been positive relatively.
That's right. Let's move on and talk about Prabhat Dairy, which has been trading under pressure, and the stock is down almost between 3 to 4% in trades so far. The counter reported its September quarter numbers post market hours yesterday. To give us the fine print of the earnings for the quarter gone by and to discuss the road ahead for the company, joining us now on the phone line is Joint Managing Director and Chief Financial Officer of the company, Mr. Vivek Nirmal. Mr. Nirmal, thanks a lot for joining us. Could you tell us what were the factors that led to muted set of numbers this time around?
Actually, if you see, we have posted a good growth in terms of top line of around 18% this time. And that is basically on back of our consumer business increasing and our value-added products particularly. On EBITDA level, however, it is a bit flattish. Reason being, there are basically two reasons for it. One is, as our consumer business grows, we continue to have higher level of schemes and discounts for the trade, for the retail as well. And that is why our realizations have been low. But if you see, our gross margin also have improved. On the other hand side, as the value-added products sales is increasing, our manufacturing costs have gone up particularly. A lot of items of them are one-off items, which we don't expect them to continue in the next quarter. And that has been basically on account of our new trials and experiments in the value-added product segments like cheese. That's why, our EBITDA is more or less flattish this time.
Okay, so the gross margins have improved, but tell us, given the supply situation, what does this mean for your pricing? What part of this advantage are you passing on to your customers?
As far as the milk pricing is concerned, every year and post Deepavali season, festive season, and especially when the rains are over, if there are good rains, milk availability definitely is higher, and we are seeing the same cycle here this time. In our B2B, most of the business is a milk price pass on. So whether the milk price increases or decreases, it's a pass on. So there we are not going to see a lot of impact on our margins. In terms of consumer business, yes, definitely the lower milk prices are going to impact positively. But at the same time, we will continue to maintain our investments in distribution, sales, and brand building. So all the gross margin benefit, what we will be getting out of that, we will make use of this opportunity to invest more into building our own brand.
Mr. Nirmal, you highlighted that the operating performance for the quarter was flat. Could you tell us what's the kind of guidance that you can tell us for the second half of the year? Will the margins be around the same 8.2 to 8.5%? Our
overall strategy is obviously to reach higher margin as our consumer business grows. But particularly if talking about the next half year, I believe the margins have to remain stable to good, particularly because this part of the season will be having relatively lower milk prices than the first half of this year.
And lastly, tell us, what is your strategy for achieving the envisaged FY20 revenue guidance of 2,000 crore rupees?
Absolutely. So 2,000 crores is our vision for 2020. And while we are already an established dairy ingredients player, that segment is now more or less constant. We are growing the corporate customer base over there in that segment. And the quality of customers there, is improving. But the consumer business, which is to the tune of around 400 to 500 crores right now, we are directly targeting doubling it by 2020. We are pretty confident because our infrastructure of distributors, depots, sales team and all has been built in last 2-3 years. And now we will be using that pipeline to fill in more products. So by increasing the depth in the current retail outlets, and also we are in line of launching new products. We have recently launched UHT milk. We are also in line to launch the beverages like lassi, buttermilk, milkshakes, which will soon follow. With all these things, we are definitely confident of achieving our vision of 2,000 crores by 2020.
All right, Mr. Nirmal, we'll leave it at that. No, thanks a lot for joining us and decoding the quarter gone by. Well, let's put spotlight on some other stock, and that is KPIT Technologies. Well, the interesting bit about the stock is that it has fallen only twice in the last 4 weeks, and the stock is also gaining for the 9th straight day and is trading at its fresh 52-week high in today's session. And Neeraj, the only bit I can add here is I've seen a bit of action on the future side, but to me it looks like it is more of cash-based activity which one is seeing here.
So maybe post-results activity wherein people have bought it. But, just a couple of things out here. One is the trading pattern, which is looking fairly strong. And if you look at it, while it's got some intraday falls, by and large, it's managed to close in at the highs, and eventually I think the 12.5% gain over the last 9 days. For a mid-cap IT company, that's probably not a bad number. 12.5%, that's pretty strong. Now, I was just going through what the company's done and what could be the reason. I was speaking to Agam as well. The numbers weren't bad. I think they reported about a 5.5% quarter-on-quarter revenue growth. The expectation was that the numbers could come off on the top line and the bottom line, and actually managed to beat on the other side. So it took the street by surprise, and the stock has done reasonably well post that. And it's showing in the way, if you just look at this, the Bloomberg estimate for the EPS went up after these set of numbers, and currently trading at about 12 times, but this is the Bloomberg forward P for FY18. If you roll it over to FY19, which the terminal is not showing, it's probably trading at about 10 times for a company which clocked in a revenue growth of 5.5%, 4.3% quarter on quarter. Though keep in mind that the management has indicated that the quarter 3 will see flattish revenue growth. So quarter 3 may not be as good as quarter 2, will not be as good as quarter 2. I mean, you can confidently say the management has given that out as well. But hey, this is the trend that we are seeing. More and more people starting to like IT, and mid-cap IT in particular. It's not just restricted to KPIT. I think a bunch of other mid-cap IT names will have more buys, maybe some holds, as opposed to sells, because the valuations are in your favor. If the company manages to show growth, then the valuations are in your favor. It's happened with Sonata Software. It's happened with KPIT. I think we've seen Emphasis getting a bunch of buy calls as well. So that's the other interesting bit. And then it's showing in the trading activity, because simply something that we do every day is try and show you how the volume picture is looking like. And as you can see, that the volumes over the last 12 days have gone up, and in today's session as well, I think the volume picture is pretty strong. The price action may not be as great, but the volume picture is pretty strong for KPIT. So let's wait and watch. Maybe Navneet's assessment is correct. It's not too much of trading activity, but more a case of cash market buying. But whether it's run its course or no remains to be seen. After the run-up, a couple of brokerages have come out and said that we are reducing our rating from reduced to a hold, but not going out and initiating a fresh buy after the run-up that has happened. Back to you guys.
And Neeraj, after your link, markets are almost in green. Sensex Bank Nifty is back into the green, and Nifty's just down almost 4 points at levels of 10,221. Good time then to get our technical experts into this discussion. Joining us now on the show is Ruchit Jain, technical analyst of Angel Broking. All right, I think Ruchit will join us in a bit, but I'll go to Shrikant Chauhan first, Senior Vice President Technical Research from Kotak Securities. Hi Shrikant, good afternoon. Thanks a lot for joining us. Do you think the support which one was talking about around those levels of 10,200, there's been a sharp recovery in the markets, and once again that has come in the second half of the session. Would you look to take any sort of fresh longs now?
Yeah, good afternoon. I think, the way a market today recovered from the lowest low of 10,180, if you remember, this was the highest high before the Muhurat trading, and after hitting 10,180, market fell to some extreme levels, but now the market is like after hitting 10,490, now again resting around 10,180, 200 levels. And if we go through with the option data, then there also, if you see that, if you can see at 10,200 strike price, put options are still as it is. They are intact, 52 lakh shares of open interest. So what it means that the fear is not there. And that is why I feel that there is a short-term bounce back, which is very likely in the near term. So with the same stop loss of 10,180 or 170, we can look for adding some long positions at current price with a price target of minimum 10,270 and maximum 10,300. even if you go through with major indices like infrastructure or Nifty Infra or maybe Bank Nifty, then there also the sell-off is not there. In fact, they are recovering from their lows. So what it means that these major indices are supporting to the broader market, and there also we have a bullish view. So broadly at this price, certainly Nifty has taken a support and it is reversing back. So it's a buy.
Okay, a buy call on Nifty as well as Bank Nifty, which is now being suggested. Bank Nifty has in fact turned positive, up 14 points. Nifty has once again slipped into red, so it's down by 4.5, but Sensex is up 17, 18 points. So sharp recovery though from lower levels for all these key indices. Ruchit Jain, technical analyst at Angel Broking, also joining us now. Ruchit, one key heavyweight that must get credit for the recovery in markets is RIL. Will you enter into a fresh long in Reliance?
Yeah, good afternoon. Yes, probably we have seen since last, if we see the positional charts of Reliance, then definitely this has been one of the stock which has taken leadership on every up move in the market since last 5-6 months. No doubt, even at current levels, if you see the positional charts, then the broader trend for the stock is positive, and we are witnessing the stock giving a bounce back from its support zone around 870, which was the previous high which was crossed in during the month of during mid-October. So I think this around 870, the stock has a very good support, and there is a high probability that this pullback move would extend up to 920, 930 kind of range in next few trading sessions. So if one has to look from a next at least 3 to 4 days perspective, then one can take a long position in this, keeping stop loss below 870 for target somewhere around 930.
Okay, so watch out for 930 on Reliance Industries. Less than an hour to go for markets to close. Let's get some trading strategies going. Ruchit, what are your top trading strategies?
I have a buy strategy and a sell strategy as well. We are recommending to go long on Ujjivan Financials. We have seen that in last 3-4 trading sessions, the prices have given a breakout from a long-term falling trendline resistance, and post the breakout, the volumes on the up moves are very good. Even in today's trading session, although markets are trading flat, but the stock has shown a good outperformance in today's trading session too. We are expecting this up move to get continued in near term. One can go long with stop loss below 369 for target around 430. And my second call is a sell call in Asian Paints. Well, although we have witnessing a broad consolidation phase in this stock, but after a long period of time, this stock has started forming a lower top formation on the daily charts. Also, if we see the RSI oscillator, then RSI is not able to cross the 60 mark, which is usually a negative sign. So I believe that near term the stock is likely to remain under pressure, and we are having target around 1110, which is around the 200-day SMA on the daily chart for this stock. So one can go short on Asian Paints, keeping stop loss above 1188 for target around 1110.
Okay, so one buy and one sell. That's actually interesting. Even in the morning show today, Navneet, interestingly, both of our analysts had one buy and one sell, so kind of hedging their bets. But Shrikant, what's your strategy? Will you also go with some buys and some sell?
No, I think it is better if you go long in this market, because there are like stocks which have like corrected and they are part of index, like Hero Motors. Which is like corrected to the levels of 3600. Now it is recovering back and it is above its days highest levels. Even if you go through with its daily chart, then since the last 3 days the stock is well maintaining above the mark of 200 days simple moving average, which is a very good support area for the stock, and from there the stock is reversing. So we are of the view that it is going to cross the levels of 3700, 3720, which is its next retracement or resistance level. So from here also there is a upside gap of 70-75 rupees, which is almost 2% from current levels, and the stop loss level is very nearby. So with a stop loss at 3620, one can look for adding Hero Motors at current levels with a price target of 3720. The other stock which we like, on which you discussed, is Reliance Industries, and there also the stock has corrected to 50% of its entire rise. So after hitting 750, 760, stock all the way went to 950, 960 levels, and from there now the stock is again very close to its support area. So here also we have a view that if we take a short term long call on Reliance, then I think it looks like it should reward. With a stop loss at 884, we should look for adding Reliance Industries to our trading portfolio with a price target of 915, 920 on the high side.
Well, with markets recovering, there's been a sharp correction which has come in for the India Volatility Index. Remember, the day's high level was 14.7. It's now fallen to just 14, but still on the higher side. But we've seen a goodish bit of correction. It was up almost 4% in the first half of the session, but now it's just about trading flat. Let's get some individual stock ideas going. The stock of Tata Global Beverages, remember the numbers had come in today and the stock's seen a good jump of almost 5%. It has also touched its fresh 52-week high. It's also in the futures space. Let's see what the futures are doing of Tata Global Beverages. As you can see, the reaction came in just post the numbers, which were, I guess, a little bit above what the street was estimating. We've seen fresh longs coming up as the open interest is also up 19%. Richard, Tata Global Beverages on the chart, are you witnessing any sort of fresh breakout?
So there's no second view that the stock is in an uptrend since last few months now, and even if we see the up move compared with the volumes, then whenever the stock has moved higher, the volumes are usually quite good, and the corrective moves in the stock is more of a time-wise correction rather than price correction in the recent past. So this is a sign of the strength, and even the momentum oscillators are indicating that the strength is likely to continue, and we could see levels around 260 in near term. On the weekly charts, if we observe the recent up move of last 1 year, then this seems to be a wave 3 of an impulsive up move. So I think the stock still has a long way to go on the upside. So the positional traders who have a short to medium term view should definitely look to hold on to the long positions.
Okay, so these are some of the interesting trading ideas. In fact, Ujjivan and Tata Global have been two sharp movers over last hour of trade when markets have also recovered. Let's move ahead. Indians will continue to flock to the movie theatres, making multiplex companies a good bet for Morgan Stanley's Swanand Kelkar. The man who oversees investments worth over $3 billion believes Netflix cannot take away the excitement that a movie theatre offers. Speaking to Bloomberg Quint in our special series Alpha Moguls, Kelkar listed out the sectors that excite him and ones he would rather stay away from right now. Listen in.
So we like multiplexes as a broad theme.
There are only two listed ones.
Exactly. So we like that. We like that space. I think the key thinking there is that it's an experience now, going and watching a movie. It is cyclical, I understand, and content has a lot to play. Content has a big role to play on how multiplex stocks do. So that is one theme that we like.
If I may just interject out here. So I'm one example of somebody who off late has not bothered going to a multiplex because I don't mind seeing a movie unless it's a pot boiler 2 months down the line on an Amazon Prime or a Netflix or any of the others at the convenience of my bedroom with my headphones.
Absolutely.
Is that a threat?
It is a threat, but keep in mind that you're the top of the pyramid, right? The Netflix subscription in India, along with, let's say, the data that you will consume to watch, is quite steep. It's not cheap. You'll probably be able to watch 3 full-length movies at a good multiplex on a monthly Netflix subscription plus data for one movie. So you preserve or you like to watch it at your convenience, but not everybody is doing that. It's a very top of the pyramid thing. So as I said, multiplex is a content cyclical sector. You need good content for multiplexes to do well. They can't do on their own because at the end of the day, they are a pipe connecting the content and the consumer. Yeah. They're only as good as the content is or the consumer sentiment is. So it's one space that
you're bullish on. What about content creators? Balaji's entered into this deal with Reliance. There are a bunch of others which are lining up. I mean, Mukta Arts and the works as well. Do you like the content providers?
So the content creator has been a bit of a difficult area for us to bet on because it is like betting on fashion, right? You don't know what does well. So there is so unless somebody can show a consistent hit ratio on content, it's very difficult for us to get engaged. And today, many different media for content delivery are getting explored. I think that market is not yet settled. We don't know what is going to win in that market as yet. I mean, is it the consumer subscription-led model? Is it the advertiser-led model? Is it a combination of two? You can make great content, right? But at the end of the day, you need to make money on that content. So I think I'm waiting and watching. I don't have a clear answer on that space yet. But multiplex and some of the broadcasters is where our media weight is currently.
Okay. What is looking like, to your mind, a dark horse Again, not from a 6-month perspective, but from a 2-year, 3-year perspective, where you believe earnings growth is not being priced in by the market, and if there is anything that you are anti-consensus right now.
Sure. So what we have started building in our portfolio in terms of positions is in the pharma sector. So we were underweight pharma for the longest time, have remained that. And within pharma, what we are doing is trying to steer clear of companies who get a lot of their revenues from the US markets. So within pharma, you have this opportunity to pick domestic pharma growth, right? And it could be diagnostic companies, it could be hospitals, it could be companies which primarily cater to the domestic market or the emerging markets, and stay clear of the US exposed companies where there are clearly headwinds. And unfortunately or fortunately for us, all these companies are getting painted with the same multiple because they are pharma. And we're getting opportunities there to probably get into positions which will deliver 2 to 3 years out maybe. So we are increasing our weight in the pharma sector, cutting our underweight there. The one thing where we have been anti-consensus is that we have stayed away from the insurance sector as a whole. All IPOs we have ducked, we have not subscribed because we have found them to be really expensive. They have been sold as a financialization theme, as financialization of savings. But we have found better ways to play that theme through some of the other stocks and sectors that I mentioned.
Okay, the markets are pretty volatile. Nifty is back into the red with cuts of almost 11 points. Bank Nifty is just about holding around yesterday's levels of 25,350. Sensex has slipped almost 6 points after going into the green. Let's get in Nipun Mehta, founder and chief executive officer at Blue Ocean Capital, who is joining us on the show now. Hi Nipun, good afternoon. Thanks a lot for joining us today. Is there anything that you're looking to buy at these lower levels?
Well, I think when one looks at it from a very short-term point of view, there is always the concern that the market is showing some signs of weakness and could correct further. But when one looks at it from a medium to longer term point of view, I think what stands out is a clear outperformance in terms of most of the results that have come by. So the earnings season, I would think, has been fairly good. If one were to try and pick sectors maybe from a 2 to 3 year perspective, probably one could start looking at IT. I know it's been a sector out of favor, but probably some of the factors which seem to be in their favor is one, the fact that at least the low point seems to have been reached. You're seeing fairly stable results coming in from most of the IT majors. Their balance sheets are fairly clean. They're cash rich. So there could be acquisition opportunities for them globally as well as in the domestic market. To a degree, the entire sector seems to be under-owned. Very clearly, there is limited anticipation of them having a huge turnaround that could be there as far as the entire sector is concerned. But when one looks at it from the point of view that at least that close to double-digit growth has been somewhat being achieved by most of the larger companies. We are not including the mid-caps in this because there have been certain outperforming mid-cap IT companies. But so when you look at it from a maybe couple of years perspective, I think a lot of the IT companies have now realized that the entire opportunity that was there in terms of analytics, big data, which they seem to have been missing out to some extent, partly because of visa issues or otherwise, is something that they're wanting to capture fairly aggressively over the next few quarters. So if one were to take a sort of contrarian view, one could look at IT as a space for the next, for a 2 to 3 year perspective in terms of, or in comparison to a lot of the stretched valuations that one sees in other sectors today.
Okay, so IT is a sector that Nipun believes should be bought into right now. Well, Shrikant, if you look at one chart, that is Voltas, the stock has moved up by around 2% in last few minutes, and looks like this is also kind of bottoming out. There is some buying emerging at lower levels. What's your call?
Pradeep, I think the stock has spent a lot of time and it was like gradually consolidating with a upward bias. Finally, the stock has broken its level of 570 and now it is trading at 597, 595. So I'm of the view that it is heading for minimum 650, 660 in next maybe few days or few weeks of time. And today the stock has given a fresh buy because some 2 days back it was at some same level 590, 592. From there all the way it went down again to the levels of 570. But finally now today the stock is managing to close to trade above the mark of 570. So the next level is 660. Even at this price, certainly one can take long positions with a final stop loss at or just below the level of 570, which is like we can keep around 565. So with the 565 stop loss, go long in Voltas.
Okay, let's get some ideas going with regard to NBFC. Now, that's the theme which has been playing out in today's trading session. Repco is up, or you look at other counters, even Bajaj Finance, which is now your nifty constituent, is one of your nifty gainers for the day. Stocks like Satin, Credit Care, Ujjivan, Mass Financial, all of them have seen good amount of gains coming in today's session. Nipun, in the NBFC space, we all know that this is one sector which has given good returns in last 1 year, but the valuations have been a key concern. Is there anything that you like in this space?
Well, if you're so most of the names that you mentioned were either microfinance companies or some of these have been, of course, very recently listed. But when you look at a broader NBFC space, we've very clearly been bullish on the entire NBFC space, despite the stretched valuations that are there. Very clearly, there is that valuation differential that's there between NBFCs and the other players in the financial space, namely both the private sector and the public sector banks. And there was that feeling that there could be some degree of narrowing of those valuations when one saw a bit of sell-off as far as, or even now, if you look at the kind of sell-off that has happened as far as housing finance companies is concerned, virtually across the board, except maybe a stock like DHFL. Other than that, we've really seen a fair amount of sell-off in housing finance companies, and maybe that under ownership as far as PSU banks was concerned is being corrected to a degree. But our sense is the NBFC space is something which is taking a breather. Again, I'm generalizing because we've seen certain microfinance companies run up. We've not seen some of the housing finance companies run up. But broadly as a space, despite the valuations, we continue to be bullish. We continue to be overweight on the space going ahead.
V-Guard is another stock which has moved up quite a bit in last few minutes. Ruchit, if you have had a look at this one, what's your call on V-Guard? In fact, the stock corrected in last 2 days and is trying to recover now.
In fact, if we see the positional charts, then the stock had already seen a long consolidation from the month of May up till last October. So probably after a consolidation phase of about 5 or 6 months, we have seen that in the first week of November, the prices gave a breakout from that resistance, from that consolidation phase, and that too which was supported by very good volumes. So the kind of volumes that we are, which we are looking in the stock after this breakout, this is definitely indicating that the stock is headed much more higher from current levels. And if we come out with the target projections using that consolidation phase, which was earlier, we think that the stock would move higher towards 255, 260 kind of range in near term. So I think the trend is quite positive in the stock. Any corrective moves such we saw in last couple of trading sessions, those should be used as a buying opportunities. When we can keep a stop loss about 214 or 215 on the existing long positions, so for probable target of about 250.
Okay, let's address Bata India's earnings, which are just flashing on your screen. The net profit for the quarter is up almost 24%. It's at 43 crore versus 34.5, which was seen in the corresponding quarter. A very muted top line, actually. If you go by the revenues, they're just up 1% at 587 crore for the quarter. And if you look at the stock also, it was actually moving higher in the past few sessions. Some bit of profit booking has come in. Remember, this is one company which has been focusing on premiumization in the past few quarters in order to improve their operating performance. Bata India currently quoting below that 800 mark, around 793. Let's just quickly get a view on the earnings. Nipun, do you track Bata?
Well, we don't, but when you look at the entire space, and like you mentioned, there is very clearly that effort to premiumize the entire product space. But when there are on the one side not too many listed companies in the footwear space, but on the other, really the entire space is dominated by the unorganized sector, and that's the move that is anticipated to help companies in the listed space or in the organized space in terms of their market share, in terms of their contribution or higher margins coming in from the premiumization of the space. So yes, I think wherever you're seeing this kind of realignment of business in terms of improving on margins that is there, clearly seems to be a positive as far as the footwear space is concerned. Also very clearly reflecting the consumption theme that we've been positive on.
Okay, so that's the view coming in. Let's talk about telecom. Vodafone India's parent company, Vodafone PLC, has come out with its half-yearly earnings today, which also puts out some of the key numbers from its Indian operations. Somit Sarkar is standing by with more details. Somit, how has the Vodafone performance been? And for this first 6 months, what kind of indication does it give you about the India operations?
So the Vodafone India's number were also subdued with as it followed the cues of Bharti Airtel and Idea Cellular. Now, first, for the second quarter, on a quarter-on-quarter basis, the company saw its revenue decline by around 7% to 8,300 crore rupees, while its average revenue per user, that is the key number for a telecom service provider, declined by around 6.4% to 132 rupees. Now, the reasons for this decline in the second quarter was that generally it's a weak second quarter is a weak quarter. Along with that, competitive intensity in the industry that Reliance Jio brought in, plus higher tax burden under GST because they were not able to pass on the hike, led to this weak second quarter. Now, in the second quarter, the customer base of the company also declined due to because customers consolidated to one single operator in the second quarter. But the company, however, managed to retain its mid and high value customers, which led to a revenue market share, retention. Now, in the second quarter, the company's net debt also stood at around 8 billion euros, which is close to 62,000 crore rupees, while its net debt to EBITDA for the declined to around stood at around 6.7 times as of September 38, 2017. Now, going forward, that is for the second half of financial year 2018, Vodafone is expecting the revenues to be further under pressure because of the IOC cut to 6 paise from 14 paise. Now, if you compare Vodafone India's number with its peers like Reliance Jio, Bharti Airtel and Idea Cellular, then the company's average revenue per user of 132 is the lowest, one of the lowest among the industries, where Reliance Jio came out with an ARPU of around 156, Bharti Airtel with an ARPU of 145, and Idea with an ARPU of around 132. Also, Vodafone India's EBITDA margin came in at around 21.3% for the first half of financial year 2018, which is the lowest among the industry. Now, Reliance Jio's EBITDA margin was around 23.5%, while that of Bharti Airtel was around 34.4%, and Idea Cellular's EBITDA margin was around 21.6%. So, all in all, it was a weak quarter for Vodafone India.
Thanks, Amit, for all these details. So the unlisted Vodafone did as good or as bad as the listed ones, looks like. Well, we'll see how they perform along with Idea after the amalgamation. NCC is the stock to watch out for, really, down 7% in last few minutes of trade, and that is because of the quarterly numbers that came around 10 minutes back. And a few details that we have: the standalone net profit is down by around 60%. And that is probably the reason why stock has crashed. If you look at the revenues, revenues also came at 1,300 crore rupees, while estimates were around 1,980, almost 2,000 crore rupees. So both on the top line as well as bottom line, company has definitely under-delivered, and that is the reason down 7% now at day's low, this stock.
Pradeep, I guess you highlighted Voltas a while back. Let's just pull up the intraday chart. It's up almost 4% right now, and it's crossed the 600 mark. The stock's trading at a day's high currently. Ruchit, anything that you're spotting on the charts of Voltas? Is there any sort of fresh call that can be taken here?
This is just a continuation of the uptrend which we have been seeing in the stock since last quite a few months now. And if we see if we draw a channel joining the recent highs and the recent lows, then it is pointing that the stock could head higher towards 610, 615 kind of levels in next couple of trading sessions itself. So one can do a BTST kind of thing if one can go long on Voltas for probable targets around 608 to 610.
Okay. Let's look at NCC once again, and Avinash Gorakshakar joins in now. Maybe we'll take a comment from him. Avinash will just let you know what the numbers are really like, against the estimate of around 543 crore. I think it has come to, I'm sorry, 54 crore rupees was the profit expectation. It has come to 20 crore rupees. And if you look at the top line, that is also disappointing. We were expecting 1980 crore rupees, but the number is only 1300 crore rupees. NCC is down 7% now. What do you say?
No, I think Pradeep, definitely disappointing numbers, because this was one company where the order book inflow was quite significantly better than the other construction companies. So my sense is, I think, one needs to look at these numbers considering the fact whether there's any one-off and why the top line in this quarter has not grown, according to market expectations. I think clearly looking at the kind of order book they have, the visibility definitely continues to remain strong. So I would believe that, if one were to look at the L1 as well as the existing order book, I think one should take a slightly longer term view. 1 quarter performance may not be a right yardstick to actually value this business. But yes, definitely disappointing numbers, at least for the result side, and probably the stock is reacting, accordingly.
Okay, a sharp fall seen post the earnings. Let's just look at a couple of stocks from the broader markets. Pull up tin plate. That's locked in upper circuit now. It's up almost 20% in today's session. There you go. It's trading at 288, but it has been locked in upper circuit. Couple of other counters. You've got Gulf Oil Lubricants. That's gained sharply. And you've got stocks like BASF, Gujarat Alkalis, Indoco Remedies. All these counters have seen significant amount of gains. And Nipun, anything that you track, I just mentioned, from the likes of tin plate, Gulf Oil or BASF, is there anything that you like from this broader market space?
Well, we don't track these stocks, and some of them are relatively small sized. But to take a cue from maybe a metals company, our sense is, of course, over the last few trading sessions, there has been some amount of, after the results have been out, some amount of sell-off that's happening as far as metals are concerned. But clearly, when you look at ferrous metals, when you look at non-ferrous metals, the entire space, given the kind of global demand-supply mismatch that has happened, or the pricing power that is there, or the kind of stronger move that you're seeing on the LME for a lot of these metals. Also, clearly, the kind of domestic demand that's coming in as far as steel is concerned. Our sense is that any fall or any even marginal sell-off in a lot of these metal companies is an opportunity to enter at these current levels.
Okay, thanks a lot, Nipun, for taking time out for us. Let's look at some more stocks which have kind of slipped off in the last few minutes. Care Rating is one. The stock is down 3.5%, has given up entire gain actually for the day, slipped into red. That's a steep fall. There's no news flow that I can spot at least. JP Associates is the other one, which is now down 7%, has given up another 2.5% over the last few minutes. And before we talk about the buzzing stock, the small cap stock of the day, Avinash, what do you think is happening with JP Group? All three stocks, JP Infra, JP Associates and Power, moved up yesterday, and today they have given up more or less the entire gains.
No, I think, Pradeep, clearly there has been some buzz that JP Infra, there has been a lot of interest from 18 to 19 interested parties, and I think that was the reason one saw significant built up in stocks like JP Associates as well as JP Infra. I would believe that yes, if the bid is accepted and the company does get about 1800 or 2000 odd crores, that would actually help the company to reduce the debt, and I think that was the reason the stocks had gone up. I think these are event-driven stocks, and whenever such news flows do come in the market, we see a kind of a good upside for these stocks. So obviously, these are stocks which actually move only on news flow. So obviously, after the news flow, getting out, or maybe on expectations that it's not going to come in soon, I think you're seeing obviously some profit booking coming in here.
Also, JP Associates will be coming out with its numbers today. Let's see if there is any sort of management commentary which comes along with the September quarter earnings. Moving on to the buzzing stock of the day, BASF India. The counter hits its record levels after registering strong gains on strong September quarter numbers. Nikki Merchandani joins us with more details on that. Nikki.
Let's stock has risen as much as 13.45% today in the trade to hit its record high after reporting a multi-quarter high profitability for that matter. If you look at the good set of earnings that is coming out from the company, revenue remains to be a muted number, though a 4% rise that we're seeing at 1,455 crore as compared to a figure of nearly 1,400 odd crore seen in the base quarter. Now, EBITDA margins, the EBITDA for that matter, that's shot up to 114 odd crore as compared to a figure of nearly 52 odd crore in the base quarter. Margins for that matter have expanded to 7.86% as compared to 3.75% in the September 2016. Now, profitability, the company has reported profitability of around 17 odd crore as compared to a loss figure of 19.39 crore that we saw in the corresponding quarter. What goes behind the making of these numbers? If you look at the top line, though we've seen some kind of decline coming in the service sales, that's a 22% decline year-on-year basis that we've seen for the segment, which has led to a muted sort of performance on the top line front. However, if you look at the bottom line number, well, we are looking at higher other income and also lower tax expenses which have led to a sharp jump in the profitability of the company. If you look at the other income, that's almost grown by 3 folds to 23 crore as compared to a figure of 7 crore in the corresponding quarter. Tax expenses have halved almost to 8 odd crore as compared to 16 odd crore that we saw in the quarter gone by back in the previous year. Just about this company's, well, it is a diversified chemical manufacturer and a market capitalization of around 8,000 odd crore for that matter. Back to you.
All right, Nikki, thanks a lot for bringing all those details. Well, from buzzing to Fab 4 stocks of the day, and Yash Upadhyay, as usual, joins us to take us through the same. Yash.
Well, good afternoon, Navneet. So we start things off with Techno-Electric Engineering. The stock is up as much as 4.5% with today's move coming on the back of brokerage firm Bob Capital initiating coverage on the stock. The target price has been set at about rupees 420, which translates into a potential gain of close to 20% from yesterday's close. Interestingly, analysts tracking the stock do not have a single sell rating with 11 buys and 2 hold ratings. So do watch out for this one. Kalpataru Power is another stock on our radar. It is up about 4% right now after the company came out with a decent set of numbers. You know, revenue grew by as much as 10%, while net profits saw a healthy jump up of about 23% on a year-on-year basis. Also, the company said that it has won fresh orders worth close to 1,200 crores, so do watch out for this one as well. Vakrangi is an interesting one on our radar. The stock is up about 5%, but has been gaining for the past 4 consecutive trading sessions and is up almost 18% in that period, with today's move coming on the back of the company being included in the MSCI Global Standards Index, along with Britannia and Petronet LNG. And lastly, we have Jain Irrigation. This one is also up about 4% today after the company said that its pipe division has won an order worth rupees 138 crore under the Amrit Abhiyan Yojana with the city of Jalgaon.
Okay, Yash, thanks a lot for bringing those Fab 4 stocks of the day. And once again, as we speak, the markets have slipped 10,190 now on Nifty, down almost 34 points. Bank Nifty slipped below the 25,300 mark, but there are a couple of stocks which have seen on the derivative side as well. Marico is one that's been pretty weak in today's trade. That counter is down over 3%. Shrikant, on the charts, Marico, would you suggest it's trading almost at day's low? Should one take a fresh shot at these levels?
I think, see, this stock is highly liquid, and no doubt that technically it has broken its important support area at 308,309, and after that there is a vertical sell-off. So yes, we may see some more weakness up to maybe 280, 277 on the downside. So instead of taking short calls, one can, if there is any long position, then we can reduce to that positions and we can look for any other stock, because it has broken this support of almost last 4 to 5 months. So definitely it is going to fall further. So 280, 277 is the next target to watch out for. One can reduce positions at current levels.
Okay, so that's the call. If you look at one stock which has moved up quite a bit in last few minutes is Venky's India, up 4% now. So that takes it higher by around 12% in today's trade. Venky's trading at day's high actually. Ruchit, what's your call? Is it too late to buy?
Yeah, I believe that if you see the recent past of last 6-7 months, then definitely the stock has shown a significant up move. In today's trading session, although we have seen a breakout again from a consolidation phase of last couple of weeks, but if you buy the stock at current levels, then the stop losses would be much deeper. So the risk reward ratio won't be that favorable to go along at current levels. The only thing that one could do is if anyone is already holding the long positions which have been bought at lower levels, they should continue to ride the trend, keeping a revised stop loss and a trailing stop loss method.
Well, just 20 minutes for markets to close. Let's just check which are the stocks which can go out of F&O ban, or rather which can enter for tomorrow's trade. Well, Kaveri Seeds and Granules India are the one which are very close to entering into the F&O ban period. Remember, as of yesterday, the overall open interest in the futures and options market was in between 92 and 91% for these counter. As a percentage of market-wide position limit, for a stock to enter into the ban, it has to breach that 95% mark. And remember, for Kaveri today, there's a lot of open interest addition which has been seen for a couple of option strike, whereas for Granules, we've seen open interest addition coming for both on the futures as well as options side. Two stocks which may come out of the F&O ban are Indiabulls Real Estate. As of yesterday, the overall open interest was 82. For a stock to come out, it has to go below the 80% mark. And Jet Airways, we highlighted yesterday as well, just at that point of 81%. So a little bit of unwinding is needed, which has been seen for a couple of option strike, but remains to be seen. The trends can change in the last 20 minutes of trade, Pradeep.
Okay, so these are the stocks really to watch out for, which may enter F&O ban or move out of F&O ban. Some stocks that have moved up, look at the small cap space, and I can see Merck Electronics, MIRC, Merck Electronics, which has gone up by 8%, another 8%, so to say, is reaching the 20% upper circuit, or maybe it's already locked there. Another stock which has moved up is Nath Biogenes. The stock has moved by 4.5%. And I remember some queries in our Ask BQ program on this particular stock, and the stock has been buzzing really up around 10% now. Titagar Wagons has also moved up by 1.5%. It's up 7.5% now, quoting at day's high. Avinash, these few stocks, as we just discussed, Titagar Wagon, you have a Nath Bio, Merck Electronics, and also Action Construction, which is also, I think, almost locked at the upper circuit. Anything that you like?
I think, Pradeep, I think within this, bouquet of stocks, I think Titagar Wagon looks interesting. I think they have a large exposure in the wagon business. They are now also looking at the defense business. And I think looking at the kind of order book and the kind of balance sheet, I would presume that, I think railways definitely is going to present a strong opportunity for most of the market players, because I think before the budget, you're going to see the railway stocks also moving up. Hopefully, I think I would believe that, not only this quarter numbers, but even the second, third and the fourth quarter numbers should be equally good. And I think looking at the kind of margin improvement in the previous 1 or 2 quarters, earnings growth definitely should look up in this year as well as next year.
Well, markets are not really able to hold, Navneet.
Not at all. Look at that, 10,180. Now, if this is going to close below the 10,200 mark, it is a psychological mark. But remember, we were talking 10,150 is the first support, which it will see. If that gets breached today, you could see further selling pressure coming about. But for Bank Nifty, it is 25,200. So watch out for those levels. Let's just check what the volatility index has been doing, because we did see it did cool off. Bank Nifty is currently just about down 86 points. All right, let's also cut across to Neeraj Shah, who is in conversation with Christopher Wood, Global Equity Strategist at CLSA.
Right, we are in conversation with Christopher Woods of CLSA. Chris, hi, good afternoon. Thanks so much for joining us and speaking to us at Bloomberg Quint. What's your view on the mother market? Let's start off with that, because as I read your note in October, you agreed that if corporate tax cuts are dashed, the US markets would decline, but it's unclear whether the tax reforms are actually reforms, or the landmark tax reforms, or just restricted to tax cuts. Is that a big determinant of what the US markets will do over the course of the next 3 to 6 odd months?
Yeah, no, I agree with that. In my view, on a sort of 3-4 month view, the US tax debate is the key issue for the US stock market, more important than Fed policy. I also agree that the key issue is whether it's tax cuts or landmark tax reform. I would say right now the odds are still 50-50 on landmark tax reform. So it'd be nice to have a very strong view one way or the other, but I don't think that's rational. It's clear that the Republican Party in Congress needs to get some kind of tax package done by the end of Q1 next year, well in time for the midterm elections. But I think the critical issue for markets is whether it's landmark tax reform, which they're definitely trying to do, or it just turns out to be something less dramatic, just a corporate tax cut.
So how would that place how the global markets do? Because the 3 or 4 large markets, I mean, all large markets are right now trading at multi-year highs, save for China, which has also rallied quite a bit ever since you were one of the few ones who went overboard China about 18 months ago as well. What's the global market scenario looking right now? Is it uncertain, or do you reckon that this rally that we have had for numerous years now could well continue?
Now, for me, in terms of Asian markets, specifically Asian emerging markets, I remain very constructive. My view remains that Asia made a multi-year bottom in terms of relative underperformance at the beginning of 2016. At that time, many global investors thought that China had lost control of its capital account, the China currency was going to collapse. That marked the peak in negative sentiment on China. And I think we've begun a period of extended outperformance in Asian emerging markets. However, the risk if you buy Asian equities today is that Wall Street remains more overvalued than ever. So the risk is that something happens to cause a correction on Wall Street and you have a correlated sell-off globally, which would be quite healthy technically, to have a bit of profit taking, and that would be a great chance to add to your Asian equity positions. But I remain firmly overweight Asian emerging markets, and I think Asian portfolios need to be concentrated in the 2 markets my portfolios are concentrated in. That's China and India. As you rightly know, the big story this year has not been India. The big story in Asian equity markets has been China, which has outperformed all other markets, and that's been a pain trade for many global emerging market investors because they began the year underweight China.
Well, yeah. So just before I move on to India, Chris, my only question to you is, would you believe that I heard you mention that if indeed there is a correction in Wall Street and thereby a Wall Street-led correction into the other markets, then we could have a problem on our hands. Would that be the only nature of correction that could bring Asia down, or could there be internal factors which could disturb this rally for China, for India, for some of the other large Asian markets?
Well, to me, no, I think internal factors are less likely. One, talk of near-term issues, the most likely potential cause for a sell-off apart from US overvaluation, concerns about Fed tightening, etc., or tax reform not happening. The other obvious news flow that could precipitate more market concerns relates to this news flow in the Middle East, which has been very dramatic of late. That could disrupt markets if Middle East tensions led to a disruption in oil supply. But so far, the rally in the oil price we've seen has been relatively mild or moderate, given the very dramatic nature of the news flow we've been seeing in the Middle East.
Let's assume it's ceteris paribus, Chris. We don't hear too many disruptions. What about India individually? We perched well and truly above the Mount 10,000. Valuations a bit stretched. Earnings in Q2 not as bad as Q1. Do you think the numbers start showing themselves in the second half and will justify the kind of valuations that we are at currently? Is it possible to be able to predict and forecast that?
Yeah, well, I'm still comfortable sitting with I've got a structural 3 times overweight in India in my relative return Asia ex-Japan portfolio. I'm still comfortable with that. I did reduce that overweight a bit actually at the start of this quarter, precisely because the valuations were high. However, I restored it back to a triple overweight when we had the announcement of the bank recap. In my view, that was the missing link in the Indian equity story. I think there's been a huge number of positive reforms introduced by the Modi administration since the BJP government took power, but there's been one big missing link, one failure amid all the many successful reforms they've introduced, and that's been the almost total failure to address the problem in the banking system, which actually was inherited by this government. So.
All right, that was Chris Woods of CLSA talking about the global markets. But back to the markets, we're almost at day's low. Let's get dealing room check going, and Yatin Mota and Darshan Mehta are joining us with their channel checks. Yatin, over to you.
Thanks for that, Navneet. And we have Sun Pharmaceuticals. That is the first stock coming up. Of course, you know, as you were mentioning, the markets at the day's low. Probably a lot of profit taking coming in as far as the large cap stocks are concerned. But Sun Pharma, this is one stock which will report their quarterly earnings post the market hours, and dealers are expecting good results there. So, you know, they are buying at lower levels. Jain Irrigation also, another stock wherein domestic funds are active buyers in trade. And yesterday also the stock was quite active in the future and option segment. Today also 3.5% up coming in for Jain Irrigation. And finally, we have Hudson Agro. That is one stock on the back of HNI action. The stock was quite active in the morning, of course, has given most of it gains. But you know, dealers are expecting that because of market HNIs entering the stock, we could see a 10 to 15% short-term upside for. But we have Darshan, which has the other list of.
Yeah, so Indiabulls Housing Finance is the one that dealers are talking about. Has come sharply off the day's low. There's a buzz of a possible corporate announcement that could come in very, very soon, probably as early as today or tomorrow. Probably to do with some sale of some non-core assets that they have. So Indiabulls Housing Finance is the first counter that dealers are talking about. Ujjivan, a lot of dealing rooms did indicate that there is a potential, they have the potential news of a potential M&A that could happen in the counter, and that is why the counter is up almost 5%. That's the reason we try to find out what's happening with Ujjivan. And finally, the last counter that dealers are talking about is Balkrishna Tyre. A large FII has been buying the stock for the past few days, and the buying continues. So Balkrishna Tyres is something that dealers are talking about.
All right, Darshan and Yatin, thanks a lot for getting the dealing room checked. Let's also get some trading strategies going then. Shrikant, I'll come to you. Markets have corrected. What would be your top trading strategies at this moment?
I think the market is definitely into short-term weakness, but today the market has tested its very important support area, and here if we again go through with other indices, then there is like a gradual decline. A lot of stocks are available at their important supports. Just now on which we discuss is like Escorts and Indiabulls Housing Finance. So these both stocks are really looking good. Escorts, which is closing at 709, 708 levels, is reversing from its important rising trend line. The stock has corrected almost 60% of its entire gain, and now it is reversing back. So here we have a buy call with a stop loss at 695 with a price target of close to 725 on the higher side. The other stock on which we discuss is Indiabulls Housing Finance, and there also we have a bullish view because the stock is reversing, and on daily basis the stock is very close to its previous support area of 1150, 1160. Today the stock has formed some bullish reversal formation based on candlestick pattern, so likely chances of hitting 1250, 1280 in next 1 or 2 days of time. Stop loss is very close by, so with a final stop loss at 1150 we can look for adding the stock to our trading portfolio with a price target of close to 1300 on the high side.
Okay, so that's the strategy coming from Shrikant. Ruchit, what do you recommend?
Start with the sell call first. We are recommending to go short in Yes Bank once it breaches 302, 301 kind of support. We have seen that within the private sector bank, after a long period of time, this stock has formed a lower top, lower bottom structure, and also its long-term moving averages has been breached. So we believe that the short to medium-term trend would remain negative now. Since last 3-4 trading sessions, the prices have consolidated in a very narrow range. Once the stock breaches 301, 302, we can see continuation of the weakness, and the stock could head lower up to 287 in next 1 or 2 trading session itself. So that should be on the focus. And one buy idea would be to go long on Mahindra & Mahindra. Again, as we discussed, Yes Bank was an underperformer. Mahindra & Mahindra is one of the stock which has been showing outperformance in the last couple of trading sessions. The prices have breached, have started forming a higher top, higher bottom structure, and have also breached its resistances in yesterday's trading session. So this outperformance is likely to continue in Mahindra & Mahindra, and won't be surprised if in next 1 or 2 trading weeks itself we would see new highs in this stock coming in.
Well, the auto pack have managed to hold on their gains. Hero MotoCorp, Amara Raja, Bajaj Auto, M&M, Motherson, all these counters are actually going to close in the green. Avinash, anything in the auto space or onto auto ancillaries that you like? I've seen good numbers coming from Minda Industries. That stock's been pretty strong today.
No, I think Minda Industries as well as Minda Corp, both these auto component players should do well. And I think within the frontline auto component players, something like a Motherson Sumi or Bharat Forge, I would believe that yes, over the next, say, 2 quarters, we could see a bigger ramp up both on the domestic as well as on the export market side. So I think clearly any decline should be used as an opportunity to actually buy on declines, because we see a lot of value in the auto component space, especially going forward, looking at FY18 and FY19.
Okay, I think Eicher Motors was the most interesting stock. After the result, it cracked quite a bit, finally going to close the day somewhere in between the day's range. If you really look at it, Avinash, any views on this quickly?
No, I think, Pradeep, numbers were definitely decent, but much below what the street expected. I think the markets were looking at a figure of 530, 540 odd crores. The operational EBITDA has grown by about 26%. So I think net numbers are good, but slightly below the street estimate. So some amount of profit booking, the stock had actually run up just ahead of the results. So this is normal profit booking, but definitely longer term prospects, if one were to look at FY19, I think definitely the stock is a buy on decline.
Okay. Just 4 minutes for markets to close, and well, we will be closing the day almost very close to today's low, 10,185. We'll get you the wrap of the market closing, but it's only the auto and the Nifty Realty, 2 sectoral indices, which will be closing the day in the green. And your biggest sectoral loser will be almost PSU Bank. That's surprising because in the morning session we did see some gains from the Nifty PSU Bank. But let's head across to Pradeep to find out how exactly are we looking at the market closing. Pradeep?
Well, just holding on to the stop loss level that Shrikant was suggesting, in the beginning of the show around an hour back. So 10,180 is protected. So stop loss for the long players didn't really get triggered, but we are very close to that, which means high risk actually for the long traders. In fact, Nifty Bank lost around 100 points in last hour of trade, and Sensex also has lost around 130, 140 points actually in last hour of trade. So a smart recovery that we had seen in the second half of the day. Markets have given up a significant part of that, even small cap and mid cap also showing more or less the same trend. Let's look at some of the key movers. And on the positive side today, we had auto stocks like Hero Moto and Bajaj Auto, also M&M, Maruti really helping the index out. Also, we had Axis Bank that gained quite a bit. But RIL, I think in terms of contribution, this stock will really top the charts. On the other hand, if you look at some of the heavyweights like Infosys, ICICI, HDFC, not really doing much, but HDFC, by virtue of high weightage, maybe it has still contributed significantly on the lower side, and so has ITC. But the biggest losers were L&T, Sun Pharma, TCS. These are some of the key losers that really dragged the index down.
Clearly, there were, it turned out to be a stock-specific day. Definitely, there were some movers which were seen in the broader market. I want to pull up tin plate first. Look at that. That counters closing at upper circuit. Gains of almost 20%. As you can see, the gains came in the second half of the session. Tin plate closing the day with 20% gains. And just in last 1 hour of trade, pull up Venky's India. That counter saw a good amount of buying, closing with gains of 11%. Venky's came out with its numbers 2 or 3 days back. The numbers were not so good, but there was some sort of buying which came in today. Talking about the numbers, you have a couple of other counters from the likes of NCC and Tata Global Beverages, which came out with the numbers today. NCC's numbers were not so great, but you had Tata Global Beverages, numbers were good. The stock also saw a good amount of gains coming about. NCC, as you saw, was down 7%, and Tata Global Beverages closing with gains of as much as 5%. Couple of other counters from the broader markets. Gujarat Alkalis, that was pretty active in today's session. It saw gains of 13%, closing at levels of 783, and Repco Home Finance right from the morning session reacted positively. The good growth which we're seeing after 2 or 3 quarters, clearly street giving thumbs up to the earnings of Repco Home Finance. Ujjivan Financial is the other one which saw a good amount of buying, and profit booking seen for a couple of your consumption, or rather from the FMCG space. Stocks like Marico, that was down almost 3%. Britannia, even D-Mart corrected today with cuts of 3% that one had to see. Britannia was down 2%, and Avenue Supermarket closing the day at day's low with cuts of over 3%.
So let's see how the complete picture really looks like, and let's look at the key contributors. First up, well, RIL leading the pack, contributing around 10 to 11 points to the gains in Nifty. Axis Bank contributed 4 to 5 points, and Hero Motor 2 to 3 points, not much. On the negative side, L&T, second day in a row, is the one which is dragging the index down, and also HDFC Bank. HDFC doesn't really figure here because the losses were probably limited, just 0.5%. But being a heavyweight, HDFC Bank is in fact a key contributor, and also TCS and ITC. So these are the stocks that were active on the negative side and really brought the indices down, Nifty, and also to an extent Bank Nifty. HDFC Bank would have contributed to that one as well. Let's get the second picture here, that is the advanced decline ratio. If you look at it, barring the first hour and a half, through the day we had a negative advanced decline ratio, and towards the end it kind of widened. So till 3 o'clock we thought probably that market was trying to form a bottom, but towards the end the gap again widened. There was selectively selling pressure in various active mid-cap stocks as we also tracked them towards the end. Now this is the picture on Nifty, 60% stocks in red, which is not really looking good when index was trying to recover from days low. In fact, there were not many heavyweights that could contribute other than RIL, as we just saw. So little support coming. There were so many heavyweights that actually dragged the index. Now, if you look at it, the TCS, HPCL, IOC, so oil marketing companies, capital goods, metal, that is Vedanta, across sectors, there were some stocks that really were dragging the index down. If you look at the granular picture on the index and see which were actually the stocks that saw the pressure. But before that, let's have a look at the turnover and NSE cash at 33,000, 34,000 and 4,000 crore in BSE cash also. So it's more or less in line, I would say. The turnover remains average. But let's look at the picture within the index stocks, and this is interesting. If you really look at it, what we should look at is the kind of volume that we have seen. And here, out of these 5 key volume grossers today, the stocks that traded with above average volume, 4 are actually the losers. Well, we'll probably leave the Bharti Infratel aside because this was a big deal. iShares also fell with extraordinary volumes after the numbers. A significant supply coming in, probably it got absorbed quite a bit, got absorbed actually, and the stock recovered. But Mahindra & Mahindra, HDFC, and even Indiabulls Housing, these are all losers. On the positive side, we only had one, Hero Motor, that moved up with good volume. So other key losers, while they traded with above average volume, on the gaining side you had stocks like HDFC Bank, but look at the volume, it doesn't feature in the top volume grossers. What does feature here in terms of the key contributors other than Hero Motor is Axis Bank, and RIL were also some significant contributors. So that is the picture. A lot of supply coming in and several heavyweights still, and I think market is struggling to make a bottom, looking at this inside picture actually, Navneet, we should say.
Or rather not turning out to be a great week for the markets. We've ended the day in the red. Let's get some closing thoughts going. Avinash, does it perturb you, or is it just a healthy correction?
No, I think on the upside, I think the markets definitely now are looking at a stiff resistance, and I think clearly global kind of factors, especially crude prices, geopolitical factors, are now going to play on the markets. I would believe that now the coming months could possibly see a lot of action more on the domestic political front. So I think the markets could possibly see a little bit of correction, say in the next 50 to 100 odd points. But I think yes, stock specific activity would continue, and I think if someone to take a longer term kind of view, then I think one should definitely look at some quality stocks, especially sectors like auto components. Typically the domestic cyclical sector. So I think overall markets are definitely going to face a near-term kind of softness in the near term.
Well, Shrikant, I hope you are happy that your level was protected till the end.
See, no doubt that there is a huge amount of selling pressure which is going on in the market. The short-term trend is weak, but because there is an over-retracement today, the way like market was like at one point of time, it was down below 10,180, but it recovered back. So today, if there is a gap up opening and if we see like the market starts sustaining about 10,200, then certainly it will be a big positive for short-term traders, because in that case we may see a sharp pullback to the current retracement of 10,490 to 10,180 kind of level. So yes, definitely till the market is about 10,180, I think the markets are like going to recover in next few days of time.
Okay, Ruchit, how would you approach the index tomorrow?
Definitely, the today's closing is right on the neckline of that support which we all have been talking about, around 10,180. But we still believe that the entire corrective phase that we are seeing in last few trading sessions is likely to continue going ahead. Now, since we have resisted around 10,000 we have made an important higher and 10,500 mark. This is a time-wise correction as well. So we won't be in a hurry to climb the new highs very soon. I think one should take a stock-specific approach at the moment rather than going much aggressive on the index front. As far as tomorrow's trading session is concerned, initial half an hour or 1 hour would be much crucial. If the index sustains below 10,180 mark, then I think this retracement pullback which we are seeing is going to get very deep. So it would be much depends upon how the first half an hour or first hour would pan out to be in tomorrow's trading session.
Okay, Bank of Baroda numbers are out, so let's look at how that one has performed. Gross NPA at 11.2%. We don't have the comparable numbers.
It is 11.4, so sequentially there has been a fall, and even for the net NPAs. In fact, I think that the gross NPA absolute figure has seen a bit of marginal increase, but in terms of percentage, it has definitely seen a fall. The net NPAs have remained just about, they've also seen a marginal increase sequentially, but if you go by the percentage, it's been a decline of sort for both net as well as gross NPA, Pradeep.
So that's a positive. But look at the profit number. Expectations were at 414 crore, where it has actually come to 355 crores. So below estimate. This is clearly a miss by around 15% actually. But as Navneet was just mentioning, these days the focus is solely on gross NPA and slippage number. Well, slippage number is normally not disclosed in the press release, and we'll have to wait for the official statement from the bank. But gross NPA, if you look at it in relative terms, declining. This is, I think, more or less in line, Avinash, as we have seen with other PSU banks as well.
No, definitely. I think, looking at SBI numbers and then PNB numbers, I think definitely, Pradeep, as you rightly pointed out, asset quality definitely coming down is a positive sign. Most importantly, the slippage number, if that has also come down, then definitely that's add further value and further sheen to the numbers. I would believe that, the profit number going, up or down by 40-50 crores is not an important point to note.
It's basically a function of
exactly, and I think
provisioning, and that has come at 1,850 crore. I just wanted to mention the overall provisioning is 2,330 crores, out of which 1,850 is provisioning for NPAs.
Yeah, so I think it's a good sign. They have provided slightly more in this quarter. So I think that actually takes care of the bad assets, at least for this quarter.
I just remember the good days of PSU banks when the loan loss provisioning, it used to be some 15-20% of the pre-provision profit. And today, if you look at it, out of the pre-provision profit, even if I adjust for some tax here, is almost 4 times of that. I mean, 80% is actually provided for, and the remaining 20% is what is really left on the name of bottom line. So I think still provisioning remains a big pressure point for these banks, but good, at least there's some sequential improvement. But that just kind of put things into perspective as to what kind of upside is possible if NPA scenario really stabilizes. Then all the numbers like ROA and ROE will be much different. But I don't know how long will it take, how many quarters will it really take to normalize.
The stock was holding about, not only today, I guess, even in yesterday's session, it was trading in the green. So let's see what the brokerages have to say for Bank of Baroda's numbers. Marginal improvements seen for the asset quality. The bottom line was a miss, and the provisions which Pradeep just highlighted for you, overall provisioning came in at somewhere around 2,329, out of which provisions for non-performing assets for the quarter was as much as 1,847. So those were the Bank of Baroda's earnings. Net NPA 5.46 versus 5.05 on sequential basis. Definitely, let's see. Looks like the the brokerages we'll have to wait and watch. Let's not speculate here. We'll wait for the brokerage note. But on that note, we'd like to thank all our three guests, Avinash, Shrikant, as well as Ruchit. Thanks a lot for joining us and giving us your views on markets. Let's switch focus to European markets, and it looks like a mixed session there. And Yuan Potts joins in from our London studio with the complete details of the equity action witnessed there. Yuan, over to you.
Yeah, European stocks have so far managed to shrug off those declines in Asian markets with better than expected German growth data boosting sentiment. We're just over 2 hours into the European equity trading day, and most of the continent's markets are modestly positive, with the FTSE here in London up 0.1%, and Italy's FTSE MIB up 0.2%, but pretty modest gains so far. Germany's DAX also in the green as data showed that Europe's largest economy grew by 0.8% in the third quarter. That was well ahead of the 0.6% expected by economists. That puts Germany on track for its best year since 2011. Core European bonds also edging lower this morning, with the keeping the euro higher against its G10 peers, boosted again by that strong economic data. The yield on German 10-year bonds up 1 basis point to 0.42%. That's its highest in almost 3 weeks and its 5th straight advance. Meanwhile, gold off by 0.5% to $1,271 an ounce. That's its lowest in more than a week. And here in the UK, within the last few minutes, we've had data showing that inflation is holding at a 5.5-year high. Consumer prices here in the UK rose by 3% from a year earlier, as cheaper fuel for cars offset rising food prices. The pound weakened on the data, dropping as much as 0.3%. Back to you.
Well, thanks, Yuan, for all these details. So that was the update from Europe. Let's welcome in now Mahesh Nandurkar, India strategist at CLSA. Mahesh, good afternoon. I have read some of your recent comments, and you don't really sound too optimistic with regard to Indian markets. What's your view really?
So we feel that the market returns over the next 12 months, will be in the range of around 10 to 12%. I think this is still a reasonable return because we are in a world where the inflation is about 4 to 5%. So 10 to 12% kind of a return should still be quite reasonable. But yes, I don't think we will see a repeat of 2017 where the markets went up by 20% plus. So in that comparative sense, I would say we are not that optimistic, but on an absolute basis, we still expect positive returns.
Mahesh, hi, good afternoon. This is Navneet. We're just at the fag end of this earnings season, and I remember, most of the brokerages were scaling down their earnings expectations for FY18. We're done almost with 2 quarters, 2 more quarters to go by. Do you still expect the earnings growth to be around those levels of between 15 to 20%?
Not for FY18. FY18 earnings growth for Nifty, I think, should be around a 12% mark, in my view. We have seen 2 quarters, as you rightly said, and while there were more downgrades after the June quarter, the September quarter, we've seen more or less stable. I mean, there were some upgrades and there were some downgrades, both probably just cancelling, each other out. The next 2 quarters are going to be quite good on a reported basis because we have a low base. Remember that last year December quarter was disrupted because of demonetization and also the March 17. So the next 2 quarters should be good on a reported basis as far as the YOY comparisons are concerned. So yeah, so we expect about a 12% Nifty earnings growth for FY18, but the year after, which is March 19, we expect a much higher, close to 20% earnings growth.
Okay. In fact, your expectation in terms of market returns are more or less on par with your earnings growth estimates as well. You don't really see a risk of PE contracting, looking at the way yields are going up, commodities have run up. A lot of analysts actually feel that it's difficult for Indian markets to sustain the kind of valuations.
No, we are factoring in some derating in the market multiples for sure, because as I sort of mentioned, the next 2 quarters earnings growth is pretty strong, and the next year as well, we're expecting almost 20% earnings growth. So as against that 20% earnings growth, we expect market returns to be say 10 to 12%. So we are expecting close to an 8 to 10 percentage point sort of contraction in the P multiples. So I don't think the current P multiples can sustain if the earnings keep on disappointing. But our base case is that there will be a strong earnings recovery over the next 4 to 6 quarters, and as I said, the earnings growth expectation is about 20%.
Mahesh, since we are speaking to you on the sidelines of CLSA conference, tell us how's the response been so far?
Well, over the last 12 to 18 months, several foreign investors had actually reduced their positioning in India, and a lot of money we saw moving from South or Southeast Asia to the North Asia, and the beneficiaries were clearly the markets like Korea and China. So as we speak, the FII ownership of Indian markets in terms of underweight, overweight position is close to its all-time lows that we have seen in the last 5 to 7 years. So we've got a pretty good response, for our conference, and most of the investors are, looking at, whether it's time to come back into India, and whether it's time that the corporate earnings begins to start, or sort of will it sort of pick up from the current levels. And my sense is that while the earnings growth on a YOY basis will look good, as I said, about 20% helped by the base effect, but it's unlikely that we will see any big EPS revision on the upside. Till the time we see big revisions on the EPS on the upside, I don't think we will get large FII inflows, but at least the outflows should stop, because I feel that the downgrade cycle is over. So, in that context, a lot of investors, do want to refocus on India, which is something that they were selling for the last 12 to 18 months.
Mahesh, since you're interacting with a lot of FIs, what's the key concern? Is it only the earnings? Because overall, the emerging markets have performed really well, even if I compare it to the mother market, US market. Is it only earnings, or there are some other concerns that they're highlighting to you?
No, earnings is a primary concern, and that's the reason where India has actually underperformed, because China and Korea and certain other emerging markets have seen a pretty strong earnings growth, and not just earnings growth, there has been a positive earnings revision as well, and there has been a positive earnings surprise. Whereas in India, over the last 12 months, the earnings have surprised on the negative side. So that is really the key concern. But yes, apart from that, one of the other topics of discussion with the FI investors is, one is on the capex cycle recovery, because that is really key for sustaining the long-term growth potential of the economy, and also what's happening on the NPL cleanup, and how helpful the recent announcements made by the government on the bank recapitalization. So yeah, so NPLs and the capex cycle are the other two key questions that a lot of investors ask.
And what's your view actually on that? Because we have seen a large number of cases actually have been referred to NCLT and are actually undergoing that process of resolution right now. How hopeful are you that maybe over next 3 to 6 months we'll see some of these cases getting resolved, money flowing back to the banks, asset quality is improving, and assets also coming back on track?
Yeah, so over the next 6 months or so, we are definitely expecting a large part of the 12 cases which have got referred to NCLT to be resolved. And that's also the mandate given to the NCLT as well, as we know, because most of the cases were referred earlier in July or August. So we have time till March. And what the government has done just recently with the incremental recap plan, which is especially useful for the tier 2 and tier 3 public sector banks, because these were the banks which would have probably faced some problem in case the NCLT resolution comes up with large write-offs or large provisioning or haircuts like 60, 70, 80%. There was a question mark as to whether some of these tier 2 and tier 3 banks have enough capital to take those kind of haircuts. But now with the equity capital now seems to be in place, the NPL resolution under NCLT also gets that much more visibility. So I would say that we are quite hopeful that a large number of out of those 12 cases will get resolved by March 2018.
Mahesh, I'm tempted to ask you another question. How do you really think equity shareholders or fund managers can really make money out of it by buying into banks or buying into the companies which are under resolution? Is there a way at all?
I think from a risk-reward perspective, I would say that it's best to own the corporate-oriented banks, both on the private side and on the government-owned side as well. But within the government-owned side, I would still stick with, let's say, the top 2 or 3, the tier 1 public sector banks. On the private side, I would go with the banks that have exposure to the corporate sector and which were also impacted because of the NPL cycle moving up. So those would be the 2 types of banks that I would be buying into on the back of my expectation that NPL cycle is slowly getting resolved.
Mahesh, India's economy is witnessing a lot of structural changes. We had demonetization and then implementation of the unified tax regime, GST. We also had, a lot of rounds with tinkering of the GST slabs. What have you made out of it, since on a longer term basis, majority of the analysts are positive with regard to GST? What's the kind of theme that you would play with such structural, changes being implemented?
GST is clearly, a huge positive for the long run, and that's clearly one of the themes that we have been quite positive on. The way to play that theme is obviously to play it through the obvious beneficiaries, which will be the companies and the sectors that are facing competition from large unorganized sector players. Where GST is likely to bring in a tax level parity, which will be good for the organized sector players. But having said that, given the fact that the invoice matching mechanism has been put on hold for now, and I don't know whether it really comes into force immediately after March, or there are certain further delays into that. It'll push back to a small extent this whole invoice matching thing, and therefore the tax compliance thing as well. But then the government has also reduced the tax rates from 28 to 18%, and which in a way bridges the gap between the organized and the unorganized sector players. So yes, I mean a whole host of players on the consumer side, more so I would say on the discretionary consumer side would be the beneficiary. Those would include your household product companies, like your tiles and the non-cement building material companies would be the beneficiary of that trend. I would also say that one of the other themes which we are very, very positive on is housing. We feel that over the last 5 years, the house prices have remained more or less flat, and at the same time, the per capita income, however, has grown by 8 to 9% on an annualized basis. Thirdly, we have also seen mortgage rates going down as well. And all this has meant that the housing affordability has improved significantly as we speak. In fact, our mathematical models suggest that the affordability right now is at the best levels that we have seen in the last 2 decades. And to top it up, we have also seen the government is giving a big push to the affordable housing sector, and a lot of developers and the companies will benefit out of it. So housing revival is another big theme that we are quite bullish on. We might be 3 months or 6 months early into calling out for it, but it's going to be a multi-year theme which will be in force for the next 5 years or so, and that's the other long-term theme that we would like to play. The best way to play that theme is obviously through your housing finance companies on one hand, then you have the building material companies including cement, and then there are non-cement companies as well, like the tiles, the sanitary ware, the plumbing pipes, etc. Household product companies, the low ticket size like the fans, lighting equipment companies, and finally the property developers. So the whole host of subsectors that will benefit out of the housing recovery.
Okay. And among some of the most under-owned sectors, you talked about the corporate-focused banks, which is one that you are turning positive on right now. But let's look at telecom or the industrials, capital goods companies. These are also some of the pockets which are heavily under-owned. Are you looking at some such contract buying as well?
Yes, on the contra side, we do like telecom space, especially now that we have seen industry consolidation that has happened. So we were actually positively surprised by the pace with which this consolidation has happened, and to that extent we actually did lose out on the initial part of the upsurge that we have seen in some of the telecom stocks. But having said that, if you look at the longer term over the last 5 or 7 years, many of the telecom operator stocks are still at the same level as it was 6 or 7 years ago. So there is still some value left in those names. Apart from that, some of the select names in pharmaceutical are also looking interesting now. So we used to be underweight on pharmaceutical sector as well for quite some time, but we have bridged our underweight now, and we are looking at a neutral position on pharma since last few weeks. And as I said, some select names within pharma are also looking quite interesting from the value perspective, and and these will be the contra bets as well.
What about IT, Mahesh?
IT sector is also one sector where the valuation has become much more interesting, but I feel that the growth outlook has also worsened significantly, and yes, you will probably see some some triggers and some bouts of buying that will come into IT, but it's not a sector that I would buy and hold with a 3-year or a 5-year view, simply because while the valuations are attractive, the compounding story isn't really there. We are looking at earnings growth on a sustainable 3-year, 5-year view perspective, not more than say high single digits, or let's say at best 10%. So while you might get some valuation uptick, but the earnings compounding that one really looks forward to in identifying the long-term winners isn't really there in the IT sector at this point in time.
Mahesh, how significant do you think the outcome of Gujarat election will be for the markets in, say, 2018?
Well, I think as far as the market sentiment is concerned, there will be some impact, either way, positive or negative, depending upon which way the election results go. But I don't think it will really have a big impact on the long-term trajectory of the market. I mean, we have seen this happening in like multiple election results. I mean, there was the Bihar election, which was considered to be like a big sentiment driver. But yes, I mean, the market dropped a few percentage points after the election results. The reverse happened after the UP state elections. But these are a few percentage points here and there. Doesn't really alter too much the long-term market trajectory, because ultimately what the investors are looking for is the corporate earnings growth, and that's what really matters in the end.
All right, Mahesh, we leave it at that note. Appreciate you joining us today from the sidelines of CLSA conference and giving us your views on the markets. All right, it's time for us to address the Sun Pharma earnings, which are flashing there on your screen. The consolidated net profit has come in at about 912 crore versus Bloomberg estimate of 800 crore. Let's go across to Darshan Mehta to find out if there are any one-offs which are being seen in the earnings, Darshan.
Yeah, there are no one-offs, but it seems that it's an inline number. The revenue is coming clearly lower than what we were anticipating. So 6650 crores is the revenue that's come in. We were anticipating 6800 crores. So there seems to be more weakness as far as probably the US market is concerned. The details we will not have of the breakup of what has happened, because the press release will come in later. But just looking at the broad numbers, the profit number is decent, 912 crores versus 800 crores. Operationally, they've managed to do well. They've come in exactly. So we were anticipating an EBITDA of 1375 crores. It's exactly come in at 1375 crores. Margins has come in at 20.7% versus 20.2%. So overall, it's an inline set of number. This time around, the other income is much higher, and that is something that has translated into a higher profit. And the tax rate that they paid is 10% versus close to 15% they placed last time around. So that's the number, broad number that we are working with. The details we don't know. Taro already came out with strong set of numbers, and that has been factored into it. So overall, it's an inline set of numbers that has come in from Sun Pharma this time around.
Thanks, Darshan, for all these details. So inline numbers from Sun Pharma.
Well, clearly, and on that note, we'll wrap it up here on this edition of Countdown. Thanks a lot for watching the show. Don't go anywhere. What did you miss is coming up next.